So, hey, Mark. Mark, I was doing a little homework on your company. I was not familiar with 2 Nil Holdings. Can you just give us a brief, like 1 minute synopsis on the work you're doing?
Sure. So started the company in 2011, and our focus has really been helping a lot of direct to consumer brands with their growth strategy. And so whether that's brand strategy, marketing strategy, media activation, or kind of deep analytics, custom models, that's the work that we've been providing for the last decade.
Great. And Amie, I know many in the audience today are familiar with you from your years at ICOF, but tell us a little about TCA.
Yeah, so TCA, much like what Mark is saying, is really focused on that performance, data-driven acquisitions with our clients. So really bringing those direct to consumers to the marketplace. We are a sister company to Cadent. TCA is Jacksonville based in Florida.
Got it. Where in Florida?
Jacksonville.
Okay. You're not on the beaches of Miami with the college students.
No.
So, hi, Carrie Drinkwater has joined, and we're looking for Cathy Shaffner. Carrie, you're a Mediahub has been close in many ways to a lot of the media companies, and you bring a unique perspective on the CTV side of the business. So can you get us started as we look forward to Cathy joining as well, and just share a bit about your perspective on the state of the industry today as it relates to the transfer that we just heard about in the last panel from linear to CTV, OTV, addressable, and digital alternatives?
Sure. Sorry, I was the only one with the background on, so I wasn't sure. I wanted to make sure I was aligned with the fellow panelists. No, I thought the last panel was great. I obviously have a lot of respect and a lot of friendships with that previous panel, so it was great to hear. And look, I echo the sentiment, which may be a little bit boring, but I do think we are being forced and encouraged to have this shift. And we're being forced due to the supply that was just talked about in the diminished erosion. And we're being encouraged because of the opportunity. So there's tremendous opportunity with data and content that's available through CTV and OTT. And we're being forced to take a look at that and think about it and recommend it and really understand it, given what's happening in the linear space.
And Mark, as you're consulting with your clients, are they ready for, we heard thumbs up on we're past the inflection point. The clients are ready to move these dollars away from the traditional, buy plan legacy models. Are they ready? Are the clients really ready, or do they still need some convincing?
No, clients are ready. I think one thing is, customers are inherently smart, right? So I think in their own lives, they see their own experiences, they understand consumer trends and data very well. I think where we discuss with them some of the challenges, right? There's a $12 billion market that's going to be growing by leaps and bounds over the next 3 to 5 years. A third of households have cut the cord, right? A majority of households have some connected TV or smart TV way to stream. But at the same time, there's a high cost in the infrastructure and the targeting. So when 40% of dollars really are not working media dollars, and there's 10 to 15% of ad fraud in this ecosystem, you really have to be smart in terms of how you structure, how you test, how you measure to ensure that you're getting the return that you want from the ability to kind of enhanced targeting. So that's a little bit of the dynamic map that we kind of work with our customers to understand and try to play through.
And as you look at, oh, there you are, Cathy. I was just going to email you back saying, where are you?
I'll log back in. Hello, everyone.
Good. You started the upfront, so you weren't here because you're already doing some deals. But thank you. Thank you. One of the things that I was really fascinated. You said when we were having our prep call, and Cathy and Carrie really doubled down on this idea of not giving in to the fear, not giving in to the high pressure from the legacy networks to get those high CPMs. Cathy, let's start with you, but I'd like to, have you just talk to that perception that there's that they're imposing fear. If you're not there, then what? So what's your response?
Yeah, so, we are really fortunate because our industry was given this violent shove forward that we needed, over the past year to, allow sell side and buy side to really come together to change how we, plan, buy, and sell media. And, I was really looking forward to this upfront and the exciting times of being able to expand upon how the consumers are, using video as a whole. But what I'm seeing, or what we're seeing, is that we're kind of at an inflection point where publishers are, I don't want to say they're creating fear, but they are using what's happening with TV declining ratings and what's happening with, inventory sellout to really kind of, go back to the way things used to be, meaning place a lot of dollars in the upfront, lock in early to prevent being shut out, getting guarantees, and to mitigate these high price increases. And so, what we're urging our brands to do is resist the urge or resist the fear to go back to the way things were a year ago, and realize that we have a great opportunity to expand how we are purchasing video, just as consumers are expanding away from the living room and how they're consuming video. And so I think that we just have to be very careful that we don't fall back into the old stigma of got to get in early, got to lay down a lot of dollars, got to lock myself up with limited flexibility, because we really have a lot more opportunity to take advantage of that giant shove forward we've had with the events of the past year.
So I want to give each of you the opportunity to respond to that idea that we're not going to give in necessarily to that push forward, that if we're not there, but recognizing the limitations on a lot of the valuable inventory. What choice do you have other than to pay the CPMs? If the networks stand firm in their pricing, broadcast, cable, for their best inventory, and you need that inventory, how do you not fall back into that same pattern? Amie, do you want to tackle that? And then Carrie, and then Mark can speak to it.
Sure, thanks, Jack. I think you really have to go in with a blended approach. So you really need a combination of, some guaranteed, but you really need to have that flexibility. You need to have your investment where it's working for you and where you can continue to have that working for you. What we need to do right now is really navigate the streaming landscape, based on the audience behavior and consumption. Our marketers' goals are customer acquisition. That's our job, in the industry, is to help them with that. They have to drive growth. So, we can get them more scale, more growth as we do get the cord cutters, the cord nevers, within the OTT space. We're getting that omni-channel exposure and reach. And now that, 25% of the TV viewing, is spent with streaming, we really do need more opportunities, that are created for consumers, for marketers, for us to really, continue to be and push out on this space.
Okay.
I think a really exciting thing is, the Loop Me study that came out a few weeks ago showing, 85% of the study showed, people are willing, they want to support ad-supported streaming. I think that's great for all of us.
So, I can jump in. So look, I think there are clients, and we have clients, and TV works. It really works. And there may be erosion, but the screen on the wall and the experience works. And if you need to get your money there and there is a limited supply, the economics work, supply and demand. So that will happen. But I think what has to change is the conversation about what you're guaranteeing on. What are the audiences? Where will that content be seen? Will it be fluid? Will it be HVAs? That will be how it shifts. I do not see, given that there's such limited supply and the demand is not following, I don't see the hurry up and let's get your money down. I don't see that changing, because we saw what happened was, if you look at scatter and all these historical things that have been happening for years and years and years since we've been in the business, that hasn't changed. If you don't put your money down the upfront and you want to go and scatter and buy linear, now again, there is wonderful opportunity with data and alternative and other things that you could be doing. But if you want linear or the broadcast networks and what they sell, and you know there's more money chasing than what's available, that will happen. We just need to change the conversation on how we make that value proposition work for our clients. And is it about a different audience? Is it, we talked in our prep about business results guarantee, that has to change. And I think that most media partners are willing to have those conversations, because it isn't about, we're going to get all the money in and just do what we can. Yes, they want to monetize it, but it has to make sense for clients and for agencies as well.
Mark, you have anything to add there? Or
I mean, not much. I think they all covered it very eloquently. In general, though, it's you're managing a portfolio, right? And so there are times where you have to invest for the long term. If that warrants an upfront investment, because you look to the future and say, okay, I know I have opportunities that I can invest in opportunistically, but there's some inventory that I want to secure, that's okay. But I think the team did a great job of really articulating all those points.
So as you know, the Myers report for 4 decades now has been assessing market perceptions, agency and advertiser perceptions of media sellers. This year, our survey was completed just a couple of months ago. And what we found in terms of this inflection point model, a complete new generation, first of all, of respondents that we hadn't seen before, younger, more diverse, and a 40% turnover in the younger team members who are much more data-centric, the new generation, much more data-centric, and they're the ones who are feeding up the data to support your work and the work of your colleagues who were on the previous conversation. And what we saw is much more knowledge about and commitment to and belief that they're getting the best support and tools from companies like Samsung Ads, Samba TV, Inscape, Simul Media, and Cadent, and others that are, you know, in the past would have been relegated to the, you know, kind of also where we're looking at. Now they're leading the industry, and you know, you have Amazon in the mix, you have Walmart Media, you have Roundel Media reimagined by Target, Kohl's, Kroger's. This really speaks in many ways to the performance marketing that you're so close to. So as you look at these new players in the market, you know, is what I'm seeing in the research, which is kind of a shift to them as being primary providers, a reality? Or is that something that just showed up because we're talking to the younger team members?
I mean, I'd say it's growing, right? I think anytime folks have a chance to put fingers on keyboards and access data, access planning, access audience insights, and access, you know, what might have taken you know, a planner a couple of runs to do on a reach and frequency, et cetera, like that is powerful, right? That generates efficiency, that generates insight. It allows knowledge workers to actually bring their IP and strategy in a consultative way to their customers. So that shift is real because it's empowering, and it should be, and it should be embraced.
Yeah, and that shift is real, and it needs to be embraced as part of a holistic strategy. And I think that's the key, is helping marketers understand it's not an either or, but it's an all-in, you know, strategy. We have to think about that.
I would agree with that. You know, we really do need that holistic planning. We need to break in the publications, you know, and use their value props. You know, there's publications that drive the upper funnel, and there's publications that drive the lower funnel. We need them all.
One of the words that I haven't heard that I would have expected is attribution. So where are we on the spectrum of attribution being a primary driver of value?
High. I mean, that's all we're talking about. And there's models, and it's at the end of the day, you know, attribution really will tell you where your business, where your money needs to go. And so attribution will be our media mix modeling, you know, it will be our true north of how we move forward. And attribution is fantastic. And from your previous questions, that allows you the attribution that you need, that you cannot get. You can't get that same attribution from, these digital first properties that have data at the core. So I think attribution is going to be important, but again, it's how you're meant. What are you attributing? What is the attribution? Is it brand awareness? Is it search? Is it foot traffic? We talked about this being a very client-centric data strategy, and every client needs to understand what they're trying to achieve and what the attribution will help that, what attribution models will help them get there.
And I would say too that, the connected TV is only as good as that measurement and attribution. So there's really no one size that fits all. We wouldn't have this conversation today if there was. Marketers are demanding that video investment to be measured more like digital. And I do think, kind of to your point, Carrie, depending on what some of those goals are, that is the pain point we all share with that cross-channel measurement. But, I think we're closing the gap on that. We're now looking at smart TV data sets, where we've got 15 million and growing, where we, had panels, before in the thousands. So I think we're making, good climbs there.
Yeah, and I think making advancements on how to tackle that attribution, when you think about, as we make the shift into more streaming services, and the streaming services from some of these major video media companies are becoming some of the latest walled gardens on the scene. And we have to start thinking about how that attribution plays in that realm. That's going to be a key driver in how we place our dollars going forward in the upfront and beyond.
The walled garden conversation is really important one as you look at the success that Google, of course, Facebook, and now Amazon have, and Target and Walmart coming right after them with their own data that they're looking at. And you see NBCU, Disney, to all the networks really saying, but we have our own walled garden and trying to compete with Facebook. Can the television networks, can the television industry compete with Facebook and Google in that walled garden environment? Is it valuable to have more walled gardens, or is it the idea to break down the walled gardens and to have a standardized set of metrics across the TV and beyond to the media industry?
So walled gardens are going to create incrementality tax in terms of frequency and breaking the ability to understand frequency of messaging to consumers. So, the reality is that walled gardens actually aren't accretive to advertisers. They're accretive to the publishers that create those walled gardens. And it goes back to the question about attribution. Just attribution is a practice. I think that's what most people probably get wrong in their desire to look at measurement and attribution, is they don't take it as an ongoing continuum that has both meta level and channel level distinctions. So, there's a benefit in having some walled gardens to look at what's happening within that ecosystem in a discrete way that can inform modeling. But I don't think the networks would do well to embrace a walled garden approach.
Yeah, and from a brand standpoint, I think the key focus is going to be able to adapt to the walled gardens that exist and that are coming about, is to really build up the depth and breadth of all the first party assets that they have, because that's going to be key. And when you think about like the midterm future, so call it the next 2 to 5 years, it's going to be very complex as we as advertisers help orchestrate all that first party data across all of the walled gardens, whether they be existing digital walled gardens or the new ones that are coming from streaming services and major video companies. How are we going to send in the anonymized data and understand what's happening within each of those walled gardens, and are we getting the attribution on that backside to the measurement that we're looking for? And that's going to lead to performance-based guarantees and being able to understand how we're spending our dollars within each one.
So when we had our call last week, and I said, what else are you doing beyond preparing for the upfront? What else is motivating you? What's exciting you in your work today? And I was excited by the response you gave. And Cathy, maybe you and can start with that. I'm eager to hear that perspective because we only touched on it last time.
Yeah, sure. So what we talked about when we were together, I think Carrie, Amie, and Mark and all of us were talking about the DE&I initiatives that our companies are doing and how critical that's going to be in the advertising investments for our companies going forward. It's something that has always been occurring, but just with a new focus on how we focus on minority media, how we make sure that we are focusing on minority media consumption habits, where our dollars are being placed, how we are leveraging just a total diversity, equity, and inclusion strategy in all of our media plans. Having just a greater focus on that, a greater focus on the research, greater focus on establishing partnerships with minority-owned properties, more than just minority-owned targeting, is going to be a big focus as we place media dollars for our clients this year. And again, a focus we've had, but just now a focus that we are being more outwardly spoken about.
And then
Carrie?
I think with the technology, I'm sorry.
No, go ahead, Amie.
I was just to say, I think with the technology advances and, and the boom that we're seeing with the streaming, it really lends well to this effort, right? So we're targeting at a household level, we're going after those key segments where we're seeing high returns, and this is really a good blend, a good timing where we really can use the assets we have, to really help, get that message out there that we need.
And I would say a complete different lens, and I agree with what was said, but I think also who we are, how we operate, how we hire, how we train, how we recruit. At the beginning of COVID, you look at your screen on your Zoom box and everybody looked the same. And it took, the world to, the country changed in May. And I think that's been a great wake up to all of us. We do not reflect what the country looks like. And if we're buying media and investing media, we need to be able to represent in a better way. So and I think we talked about this. I think all companies are starting to really take a look, and we've changed a lot of practices that we have internally, and we've created groups for people, and it's been very empowering. And again, yes, diverse media and diverse owned media has to be part of the conversation, and having events and allowing them a platform in front of clients or in front of media, because a budget of, that might not be a lot to a big player can change a trajectory of some of these companies. So it's incumbent upon all of us to take on more social responsibility.
Yes, agree.
And, to reinforce that point, advancingdiversity.org and MediaVillage do an annual diversity census. And in the past year, the percentage of young team members in the business, one or fewer than 2 years, has grown to 24%, being people of color. And the majority of that, which is a shift also, are Black. So there's the industry, and that's among advertiser and agency companies. The perspective there, as I said in the earlier panel, is there's a shift in the younger generation who are heavily weighted toward the data providers and also the influencers. It's incumbent on our industry to support, to retain them, to make them feel as if they belong, and also to see that their viewing patterns, their media patterns, their behavior patterns are reflected in the media buys that they're contributing to the plans for. So I think our industry is undergoing a major transformation and shift, and that does reflect in the actual buying. I'm not sure, though, that it's reflected in the negotiation process. And so how do you, when it goes up to the senior level connectors who remain, as we've seen on these two panels, there's still a need for more diversity at the more senior level. So as you look at those challenges, and I know I've taken it off where Jimmy Tricarico and Rick and Nick and others are saying, wait a second, but I think they're on board with this conversation as well, because it's an important one. How do we make sure that you in your buying are reflecting the new generation of consumers and the changes taking place in society and culture, and that our industry reflects that in this upfront?
Well, I'll start with that one. I know it sounds really simple to say this, but it really just starts with now having the ability and awareness to have the greater conversation. And I know at Empower, we're participating in and leading roundtables with heads of, our vendor partners and working to establish partnerships with them so that we can take this all the way up, Jack, to your point, to the negotiation level. So I mean, while it sounds simplistic and form, just having the conversation, having the awareness, establishing the partnerships, really updating, internal tools and the way we think about going to market is just going to broaden that conversation.
Yeah, and I think education, right? Like, first of all, we have never had this conversation in these panels, and educating ourselves and being open to learning. 18, I think under 18-year-olds, white people under 18 are the minority. So, it's changing, it's understanding and having a better sort of appreciation for what we don't know, what we haven't done in the past, and wanting to be better and wanting to learn more, and empowering the people that we work with and bring in people to work with us that will make us smarter and better.
The word education being a critical one at MediaVillage. Online learning is our focus, because we need to develop better learning tools for those joining us and to attract those to our industry. So thank you for those comments. Final words on any topic, Mark?
Final words, just in terms of DEI, I mean, we have to be intentional. And when we think about developing leadership and making sure that people of color have those opportunities and being able to dedicate time, intentful time, to have that meaningful impact, I think is critical. And I also think it's critical that we think about DEI in a broader scope than just targeting. Right? Because the last thing we want to do is create more silos in this world. I think we have enough of those. And so being intentional about the messaging and having inclusive and equitable and diverse messaging, even in broader buys, is pretty incumbent on us as stewards of this industry to ensure.
Thank you. Amie, final words, any topic?
Any topic. I just think overall, we need the flexibility, right? So DE&I, it is that overall awareness, education, targeting, messaging, but overall, I think we just have to remember flexibility, right? So agencies, data partners, the platforms, we all have to work together. We have to service our marketers. We have to get them acquisition.
Thank you. Cathy, final words.
Sure. So, I love what Amie said. I'm gonna continue to just champion that education, targeting, awareness. Whether you're talking about DE&I or you're talking about the challenges brands are facing with video allocations in their media upfronts, they're all going to become critically important. And just challenging ourselves to think holistically, whether it be in our DE&I initiatives or holistically in our video approach when we go to market, is going to be key.
And Carrie, final words.
Oh, such pressure. I think we talked about this in our prep meeting, but I think it resonates with everything we've been saying. Use data to make you smarter, not more popular. So use data to be better, use data to be more informed, and use data to help us in our industry go forward.
Thank you. Amie Smith, Cathy Shaffner, Carrie Drinkwater, Mark Zamuner, thank you so much for an engaging and important panel. And thanks you on behalf of Cadent. Thank you for joining today and sharing your insights and intelligence with the marketplace.